Hello, everybody. My name is Robert Barton. I'm here at North Carolina State University and will be handling the logistics of today's webinar. I will be turning it over here in a second to Leslie McCormick with the North Carolina Tree Farm Program, who is the sponsor of today's webinar on domestic and global hardwood market updates. So to get things started, first of all, slides are available today on the website where you joined. I will post that link here in the chat in a second for you to download those if you'd like to get them during the presentation. If you have questions today, please enter them into the Q&A feature of Zoom by clicking on the Q&A icon, and then you'll have an opportunity to enter your question. We will answer those questions, or we'll try our best to get an answer to those questions for you after today's speaker. And so with that, let me turn it over to Leslie McCormick with the North Carolina Tree Farm Program.
Thank you, Bob. Today's speaker is Tim Knoll. Tim Knoll has a communications degree from Syracuse University and an MBA from Colorado State University. He worked as a television reporter until 2006 when he left television to work in the hardwood lumber industry. He is currently a regional market analyst for Hardwood Review, where he tracks lumber prices and writes about trends that impact future demand. Today, he will provide us an update on domestic and global hardwood markets. Before we get started, I wanted to let you know that we have another webinar coming up on May 16th on pond management, and this will be provided by Triangle Pond Management, one of the North Carolina Tree Farm Program's partners. And we will be having our 2024 annual meeting on June 15th at the Wake County Wildlife Club, and registration for that will open tomorrow. You'll be able to find a link on our website at that time at nctreefarm.org. And with that, I will pass it on to Tim. Thank you.
All right, good afternoon. Good to have this opportunity, and what I'm going to talk about a little bit today is just a quick overview of who we are at the Hardwood Review and what makes us qualified to tell you about hardwood lumber price trends and that kind of thing. And then we'll actually dip into those hardwood lumber price trends. And then get into a little comparison to what's been happening recently to what happened back in the Great Recession. And then at the end of that, a little bit of an outlook on where things are now and where we expect them to go over the next couple of months. So just from the Hardwood Review standpoint, we've been in business 39 years analyzing and reporting on hardwood lumber markets. We do weekly pricing, and then that allows us to do historic pricing, market forecasts, monthly import, export trade data, market commentary and feature articles. And we also track a lot of issues and trends in the industry. Been now fully digital since 2021. So the picture you see is what it used to look like when we printed it and mailed it out, now all on our website. So this
Tim,
is just
can you share your slides, please?
Well, looks like we had the wrong screen up there. So just give you an idea of what we, if you could see them now.
Tim, you'll have to click on the green share screen button and start sharing.
Okay. There we are.
Thank you.
This is an example of the price table that we publish on a weekly basis, just across different grades and species of lumber. And then this is the price trend data that we're able to generate because of that over time. And you can see in this particular instance, this is where the prices ran up after the COVID started and then came back down. And then we also do trends in export, hardwood lumber export data as well. So what want to start out with was the history of the world according to lumber prices. At least that's what we like to say. This is the past 20 years of our kiln dried hardwood lumber index. Starting in 2004, you see prices were fairly high then. China had already come into play as a big furniture manufacturer. We were starting shipping more hardwood lumber over there. And then we get into the housing market was very hot at that point. Then we got to the point where the housing market collapsed or began to collapse, and you see that prices started trending further down as home building slowed. The stock market collapsed. Lehman Brothers goes out of business. Banks fail. Um, that beginning of the Great Recession era there, and the prices for hardwood lumber plummeted. But afterwards, we saw a little bit of a bounce back because of a supply shortage panic. For the most part, we don't think it was really that there was that much of a shortage. It was just a very big concern that there wouldn't be enough lumber because of the number of sawmills that had gone out of business in the wake of the financial and housing crisis. And that lasted for about a year. We've seen another similar situation about 2014, where prices ran up because there was concern over supply shortages again. And then 2016 to around 2018, we saw a sustained increase in Chinese demand as they continued to increase what they were buying and manufacturing there and sending out to the rest of the world, as well as using internally. And then we had the trade war, and we had sudden oversupply and overcapacity in the hardwood lumber industry, prices plummeting and reaching kind of the bottom right before we hit COVID. And that, of course, drove lumber shortages, supply chain issues. We had pent-up domestic demand. I don't know that anybody would have guessed when that all started that it was going to cause the situation that it did, that there would be so much demand for flooring or cabinets, remodeling, new homes, all of those types of things. But that's what it did, and it shot lumber prices up to record highs. They stayed as high as we've ever seen them for as long as we've ever seen them. If you see the peaks of some of the other increases, not nearly as long in duration as the most recent one here. And then, of course, on the other end of that, as the supply chain started improving, production increased here in the U.S., saw slowing demand, inflation shot up, interest rates increased, mortgage rates increased, and prices came down approximately as quickly as they had gone up. We did see a little bit of a urgency to restock at what was thought to be the bottom of the price curve. Turned out it was not the bottom of the price curve as it dipped back down a little bit into mid 2023, and in fact about fall last year, that's when prices started rising again. So this is what it's looked like over the past year. The our kiln dried index increasing somewhat, the green index a little bit more, and you see that highlighted area there, just under 2% increase for kiln dried lumber, 10% increase for green lumber, which has put a squeeze on anybody that's basically drying lumber and selling it. This is a chart of the margin, the difference between that green index and the kiln dried index, and you'd see that it continued to that amount of difference in price continued to shrink and shrink until about the beginning of this year. It is currently down 17.64% in the past year, but it has been improving, which is helpful for any lumber manufacturers out there as we have started this year off with a little bit better margins, still a very tight situation in terms of margins for them. Just looking at more specifics for North Carolina, this is just a chart of the hardwood growing stock, of course, in the state. So poplar, white oak, red oak, soft maple, hickory, we'll talk a little bit more about and pricing trends here. We do not track black gum, tupelo, sweet gum, so we won't get into those at all. And then just a quick primer for those of you who aren't as familiar with the hardwood lumber grades, the NHLA grading system. This is a visual representation of what boards may look like for FAS, which is the highest grade. Of course, everything graded on visual characteristics. So that's usually used for furniture moldings, most clear face that you can find. So then the one common has a little bit more defects in it. You might find some knots. You'd have to cut some out of it to make what you're trying to make, often considered a cabinet grade, obviously used for other things as well. And then a two common would have even more defects, visual defects, and is used in flooring and smaller wood parts for the most part. So those are going to affect the value that you get out of a log. Obviously, the FAS is going to be the highest priced lumber, a number one common a little bit lower, and then number two common further down. And so that's impacted by log availability and how good logs that are out there. If you're going from on this scale, a 20-inch grade 1 log down, you lose a lot as soon as you go down by quality and by size in diameter class. So what we've been seeing is more smaller log diameters, lower grade logs to some extent being cut by mills recently, and that is going to leave you with a higher percentage of 1 and 2 common lumber than the FAS. So as you'll see, the prices for FAS are higher, obviously, but as you get more production of 1 and 2 common, it makes it harder to make enough money as a sawmill to be able to afford logs, that kind of thing. Poplar, let's start out with, it's probably the weaker of the price increases. Obviously hasn't increased in price in this Appalachian area, which is including North Carolina. Over the past 6 months, it's been mostly flat, a little bit down. And that is sort of the outlier in terms of species. You see white oak is at the exact opposite other end in terms of species. The upper grades have been in high demand and low availability, partly because of that log quality issue that I was just talking about. We've been producing a lot more 1 and 2 common, a lot less FAS. And so what we've seen is the price for the FAS it's skyrocketing. 1 common and 2 common have come up a little bit, but not nearly at the same level as the FAS has. Red oak also moving along a little bit better than some the poplar, but not nearly what you've seen in the white oak pricing. So the FAS has moved up particularly in the past 6 months. The 1 common has started to come up a little bit, and the number 2 common staying fairly low, has been relatively flat over the last year now. Part of that is typically a lack of demand in the flooring industry, but these are kiln dried prices, so there's also an export demand issue. Soft maple has seen a lot more of a bump in the last 6 months than over the past year. In fact, it was still coming down into the fall. But pricing has increased pretty rapidly here in the spring. We've seen that 25% increase at FAS. And the one common, surprisingly, this is the only species that we've seen this in growing just as much in the past 6 months, approximately, as the FAS price in terms of percentages, at least. There are still plenty of contacts that we have out there that will tell you that the number 2 common's not selling all that well, but we definitely have seen some price increases over the past 6 months. Hickory, again, not increasing in price nearly as much as some of those other species. The FAS has improved in terms of getting higher over the past 6 months slightly. Demand for 1 and 2 common has not really improved, and those prices have continued to slide, although they've been a little bit more stable over the last couple of months. So going back a little bit to the Great Recession and seeing how what we're experiencing in the wake of this massive price decline compares to what happened then. There's some big similarities. Worldwide economic slowdown, we've seen happen both times. A huge drop in lumber prices, obviously, we're just talking about that. And then hardwood lumber production has declined significantly in both instances. So a little bit of zoom in to each of those. After the Great Recession, or as the Great Recession hit, we had a 3-year fairly steady price decline with a larger drop at the end. Our kiln dried index fell 28% during that time. And now recently, over the post-COVID economy, after things started slowing down, about 1 year of price declines before they started coming up last fall, our kiln dried index fell by 34%. So the last summer, one contact told me, no mills can stay in business at current price levels. There's nobody making any money. Despite the fact that the prices have come up a little bit, there's still been a lot of closures and auctions. During the Great Recession, we estimate that about 40% of sawmills went out of business. Post-COVID economy, where we are right now, over the past year and 4 months approximately, so in 23 and 24, we have tracked 50 plus sawmills and yards auctioned or closed across the eastern United States and Canada. The biggest of the sawmill closures, Allegheny Wood Products in West Virginia, happened in February. They have 9 sawmills. 2 of them have now been purchased and will continue to operate and manufacture lumber for a flooring manufacturer. The other 7, as far as we understand, are still shut down. So that's just alone is a fairly large reduction in production. But across the board, many sawmills closing down. A lot of those are actually owners getting to an age they decided they want to retire, and so they have shut things down and closed. But there are others that have been financial situations as well. We also seen 32 wood products manufacturers closed or auctioned. And the numbers on all of these are going to be higher because those are just the ones we know about. There's certainly ones that exist out there that we just haven't heard that there's been a closure or that kind of thing happen. So putting the spotlight on the North Carolina closure. So the Canton sawmill was auctioned last June. T&S Hardwood Silva Mill closed earlier this year. It's scheduled for auction this coming June. They produce 20 million board feet of hardwood lumber annually. One of the things there, probably in both of those sawmill closures, was probably impacted by this, but it was definitely provided by the owners of T&S Hardwoods to the Silva Herald when they closed. They said the lack of pulpwood market with the shuttering of the Canton paper mill was a contributing factor to their closure. And that may continue to impact other hardwood producers and other forest industry folks as well as time continues to go on with those pulpwood situation. Klossner Furniture, Mitchell Gold, and Bob Williams, both furniture manufacturers, closed August 2023. Pretty suddenly. Mitchell Gold, Bob Williams has been sold, and they said it's going to reopen, but I haven't seen any evidence that they're producing again at this point. And then there's been a bunch of custom cabinet shops, millworks operations, and concentration yards that have also closed in North Carolina. So also differences between those two time periods from the Great Recession and what's happening today. Lumber prices now not at record lows, at least the nominal lumber prices. So we get into real lumber prices adjusted for inflation, and the story is a little bit different. But we also expect the decline, the export decline has been less intense, and we expect that to continue to be less intense. Home building is certainly on a different path than it was in the Great Recession when things got really difficult. So just a quick revisit of that lumber price history. You see that the dotted line along the bottom shows you where that lumber price was at the nominal lumber price back 2009 and compared to where it is today. So a significant difference there as well. But of course, costs have increased significantly, especially in the last couple of years with inflationary pressures on both cost of equipment as well as employees. Anything that goes into producing hardwood lumber has definitely increased. Some people have estimated as much as 40% over the past 2 years. I think a more likely estimate we've gotten from several people is more like 20% increase in their costs just in those 2 years, just because of how things have shaken out. Getting back to the exports and why we say it's not nearly as bad as it was 2009. There was a 39% decrease from the 2006 peak at that point down to where it fell in 2009. Last year, a 19% decline, which was a decline of 261 million board feet in the exports from the U.S. So that was the worst year since 2010, but it was still 351 million board feet stronger than we saw back in 2009. And then the housing chart, significantly different. You can see the number of single family home starts dropped way down in 2009, 10, 11. We've definitely seen some decline here over the past couple of years, but the 2023 volume of single family home starts is still stronger than 2019. So that upward trend that started after the real decline in 2011, there we see the bottom, it sort of has continued. It just got an extra boost in 2020, 21, and 22 from probably where it would have been. And we're seeing that it continues now. So where are we now? Where are we going? Hardwood demand trends and outlook for the near future. Directly or indirectly, housing remains the core driver of demand for hardwood lumber. New construction, of course, we just saw that has dropped off a little bit. Remodeling, that's a big piece of markets for flooring and for cabinet manufacturers. Those got a big boost from COVID. We saw a big increase in the amount of money being spent on remodeling, but the growth has been slowing since the third quarter of 2022. And for 2024, expenditures for the year are expected to contract for the first time since 2010. Existing home sales have fallen quite low over the past 2 years. Those as well are a major driver of remodeling and furniture. People put new furniture in when they buy a new house, but they also like to remodel the bathroom, remodel the kitchen, put new floors in. So the decline in existing single family sales has definitely reduced demand for hardwood lumber and hardwood lumber products across the board. New single family US home starts are looking a lot better. Really got peaked up May of last year, and they've sort of benefited, even though the interest or the mortgage rates have been high, they've sort of benefited from the lack of existing homes for sale, which has spurred builders to continue to build new construction. So there was that big bump May of 2023, and everything has kind of trended a little bit better since then. The early stats, the first quarter of this year, definitely suggesting that we're going to see continued growth throughout at least this year. So the pace there is good. North Carolina, particularly, those green areas are growth areas in permitting for single family homes in 2023 compared to 2022. You see that we are an outlier in North Carolina. Even if the percentage growth was less than 1%, very few states could say they had any growth at all. Most of them fairly decent sized declines, especially up in the Northeast there. Getting back to existing single family home sales, a little closer zoom in here. One of the reasons for this continued decline in monthly single family home sales, the existing ones, is that it's estimated 62% of US mortgages are at a mortgage rate of below 4%. So that's created kind of a lock-in impact on housing. People aren't able to move up the property ladder, as you will, move to a more expensive or a larger home because of the expense of that, partly because of the mortgage rate, partly because of increasing home values. And so even if you were to try and go sell your house with a below 4% mortgage rate right now and buy something else, the mortgage rate would be up around 7%. You probably would be have a mortgage payment that would be significantly, maybe even double what you are paying right now for a similar sized home in the same area right now. So that's kind of locked people into their houses, and that means that the National Association of Home Builders is forecasting a little bit of growth for existing single family home sales over 2024, 3% they're saying, but Zillow's also come out and said they're expecting a decline. So we kind of expect things to be fairly similar to last year in terms of existing home sales, which is quite low, actually. Remodeling impacted by that, as well as people having discretionary income to remodel inside of their homes that they're still living in. Of course, that big bump that happened, especially in 21 and 22, in expenditures is also impacting things, because if you've just remodeled your kitchen or put in new floors, you certainly don't need to again in a couple of years. So I think there was a lot of people moving up those kinds of projects over those couple of years, getting those done maybe a little bit earlier than they would have. And so we're naturally seeing a decline from those high numbers in terms of growth and expenditures. And again, this is Harvard's leading indicator remodeling activity, expecting growth to go down to about 6.5% this year. So export demand obviously is still a big driver. There's for a long period of time, the price of hardwood lumber was moving in the same way as exports to China were. Again, we said exports down last year, and that wasn't just to one place. It was across the entire, pretty much the entire world, Australia being the biggest outlier, the big white oak market, now a growing red oak market, and just completely different from really the rest of the world in terms of what they were doing in terms of buying more last year while everybody else was buying less. It also was across all species. It didn't matter what species markets normally buy or what we're exporting. Every single species that is tracked by government statistics fell in terms of export volume in 2023. So far this year, 2 months of data in, just through February, down another close to 4% year over year from what it was January and February last year. The bright spot, if you will, poplar. Vietnam has gotten back into purchasing a lot more, and they are a big buyer of poplar for use in furniture manufacturing, and so that's helped bring the volume of poplar up. There's other than that, other hardwoods, aspen and cottonwood, and then hard maple, but most of that is just because of changes in terms of what is being shipped across our northern border into Canada. So one other trend that's kind of interesting to point out with hardwood exports is relative to lumber, foreign markets purchased 90% more logs in 2023 than in 2017, which was the peak log export year. So we've seen a little bit of a shift towards more log purchasing overseas. It's particularly been apparent recently with walnut and white oak. While the log exports overall are up 17% year over year, that's of course just the January and February comparison to 2023, but also up 27% to China during that time. And walnut, white oak, ash, and poplar have all increased year over year for those 2 months, 37% or more. So there's a growing trend there that it is something that happens in the spring. We normally see a bump in log exports this time of year, but a little stronger than maybe we would have expected, especially with lumber being a little bit lower so far. So our outlook, domestic demand, we're expecting a modest spring bump that has been occurring here. Probably a little bit better than last year, significantly less than 21 and 22. Inflation, mortgage rates will keep domestic housing markets and discretionary spending depressed, especially right now where a lot of people thought that the Fed would reduce the interest rate by mid-year. It doesn't look like that any longer as inflation is kind of stubbornly held on. And so that's likely to keep mortgage rates higher for longer and reduces the possibility that we'll see a lot of improvement in the second half of the year. Export demand, just because of the economic conditions in many of the countries in Europe and what's been happening in China, they have a significant decline in their real estate sector as well. We're not seeing a lot of optimism that we'll see any increased demand this year. So calling for exports to be fairly flat or maybe down a little bit in terms of lumber. Here in the U.S., in terms of production and supply, U.S. hardwood production is probably down about 60% from its peak in 1999. So we're seeing low lumber demand, kind of a demandless recovery. Those prices have been going up even though demand hasn't really improved a whole lot this spring. And we're expecting that demand to kind of stay low through the rest of 2024. And we're also seeing a lot of low or tight margins on things. So sort of historically low profit margins are likely to push more sawmills and yards out of business and keep production low throughout the rest of this year. That will also keep lumber supplies relatively tight, and even the hottest items out there right now, white oak, walnut, hard maple, will probably stay fairly tight. And that's partly because of log supplies, competition for logs, especially in white oak and walnut, with those being exported a lot more. And log prices, I talked to sawmills, they say log prices are up, continue to go up. And, they're, yes, making a little bit more money, revenue, at least on lumber, as lumber prices have gone up. But the log prices are going up with the lumber prices. Green prices, as we said at the beginning of the presentation, the green lumber prices going up faster than the kiln dried prices. So there's a lot of squeeze there, and so it will continue to make it a difficult situation financially for lumber mills, and that'll restrain production as we go forward. Just a quick bounce back to see how this improvement in lumber prices that we've seen at the beginning of this year compares to the Great Recession bounce back. That one in 2009, 2010, there was 13 months of rising prices after they hit the bottom there. And they went up 26%. Our kiln dried index went up 26% at that point. We're currently at 8 months really of rising prices at this point. They've risen the most in the, since the beginning of the year, but they were rising before that. So at 8 months into a price increasing market, we're only at a 7% increase. So we're not looking at a rebound that appears to be any place nearly as strong as the one after the Great Recession crash. Short-term pricing outlook is positive right now in terms of prices going up. This is from our forecast publication that we just published on Monday, and we expect over the next couple of months that prices in the Appalachian region, which again includes North Carolina, will increase over the next 2 months. Worst case scenario there is pretty much flat. Best case scenario is a fairly significant increase, but we expect prices to mostly be driven by upper grade, the FAS price increases. Those have been going up more than the one common, as we discussed earlier, but there will be some potential for some more growing one common prices as well. Kiln dried prices overall relatively good. White oak, red oak, soft maple, and hard maple as well still have some room to run up a little bit more. We're not expecting much change in poplar prices. Probably a fairly steady, maybe not moving up more than small percentage either, or down more than a small percentage here with the spring demand period. So prices for poplar fairly flat right now. The one thing to keep in mind, however, is that because we have kind of a demandless recovery, there's demand out there, it's just not very strong. And it would only take a modest production increase to possibly upset supply demand balance, bring prices back down again. And that can be anything from reduced exports. We could have, bad weather that limits, or good weather, sorry, that actually allows more logging to happen, and we get more logs in, sawmills start running at a faster pace. And it is possible that later in the year we could actually see lumber prices coming back down. And just historically, things tend to shift a little bit in the summer after that spring bump. Exports tend to have a lull, especially to Europe in the middle of the summer when they go on vacation in July. And so that's sort of the time of year where you have to watch closely and see exactly where markets are shifting and whether they're going to shift in a specific way. So that's something to look out for. So that is where we stand today, and where we're expecting things to kind of be heading. It's not a particularly positive forecast, but nor is it nearly as bad as things looked maybe a year ago. So. I could take the questions now, if there are any.
No questions yet, but folks, if you have questions, please enter them into the Q&A feature of Zoom by clicking on the icon, and we will take those questions at this moment. So while we wait for questions, if there are any, Tim, I do want to thank you. It was a very informative presentation and everything.
Right.
All right. It does not look like we have any questions today, which is not uncommon. And everything. It is a lot to absorb and take in with what's going on market-wise and everything. All right, everybody, since we don't have any questions at this time, I do want to again thank you, Tim, for taking the time to pull today's presentation together and sharing it with us. And our audience is showing their appreciation also in the chat by saying thank you for a very interesting presentation. I'm going to quickly share my slides again for Leslie. Leslie, if you want to remind folks about the upcoming activities.
Thank you, Bob. And Tim, thank you for your good presentation. Yes, just a reminder that on May 16th, we will have another webinar on pond management, and this is geared towards forest landowners as well as the natural resource professionals who are guiding their management decisions. We also will be having our 2024 annual meeting on June the 15th, and this is when we'll present our awards and also have a field tour associated with that. And you can get more information on that on our website starting tomorrow. And with that, I will turn it back over to you, Bob. Thank you.
All right, and there you can get the contact information for the North Carolina Tree Farm Program, and it see there at the bottom is their website. So if you're interested in that field day and their annual meeting, please do go to the website and sign up for that. Tim, I guess one question that comes to my mind as an extension specialist that educates landowners and everything is, if you had to sum everything up, what would be the you know, in a sentence or two, what would I tell landowners about today's markets?
I think that in general, the markets are for in terms of if you're trying to market your timber or your logs, there's definitely some need out there, but there's also a lot fewer buyers, and so there's it's a you know, we don't track log prices or timber prices. So the only proxy that we have for that is what's happening with lumber prices. Obviously, they're rising, and we've been told that the log prices are rising. And I think that eventually, if that continues for a while, that typically will, you know, raise demand in terms of or put more logs or timber out available for sale. So there's usually little short windows of time where you know you can put a sale out there and make a little bit more in a rising market. But we also see that um, log prices, timber prices don't seem to fluctuate as much as lumber prices over time, and it's just you know it's hard to say whether it's a good time or a bad time if you're going to go put your timber up for sale right now. It's the market's kind of in a position where it's not obvious whether that's good or bad.
We do have one comment in the chat from a gentleman that indicates ash seems to be holding well in spite of the emerald ash borer.
And partly because of the emerald ash borer, potentially. There's just not a volume of ash available out there. But especially in the north, there's not, Ohio, Michigan, there's basically no commercial available ash anymore. There's still some up in New York State, and parts of Wisconsin and that. So there's some ash out there, and there's more in the south yet. And that's probably what was helping to keep that up, because we've seen a lot over the years of products that were using ash that have aren't using it anymore. Most obvious ones that come to mind are hockey sticks, baseball bats, and tool handles. There's basically no wood hockey sticks or ash bats being made. I mean, there's some ash bats, but most of that's now maple in terms of like Major League baseball bats and things like that. And then tool handles have been moving more to plastics and things like that away from wood. There's still some out there, but not nearly the demand. And there's still a good demand for ash in China and other Asian markets. That's probably helping hold it up, but also the lack of supply is keeping prices high.
All right. Another question that comes to mind is, are you seeing areas in the US where they're struggling for adequate amount of oak for like staves and stuff for barrels?
There's certainly a lot of pressure on white oak, and that's, Kentucky is obviously the center for that activity, but it's certainly well beyond that. There's now barrel and stave makers spread in many other areas outside of Kentucky that we've seen a lot of. Probably part of the run up in the white oak lumber prices is due to the demand from that stave market. There is competition for those same logs, good quality saw logs and stave logs they make staves out of have to be fairly good quality saw log or even a low level veneer log. And so there's a lot of competition for that good log out there. And so part of what has been driving kind of the white oak FAS price is those lower quality logs are only becoming available to the sawmill because a lot of the higher quality logs are going to staves. And so then you're producing more one common, two common lumber out of it, less FAS, and the demand for the FAS is still fairly strong. So that's driving that price up. And the sawmills do complain regularly to us that they are having a hard time getting enough white oak logs, and then we throw in the export situation where we've seen more of them exported recently, and that just continues to put pressure on that white oak resource in terms of what's available for the sawmill to turn into lumber. So.
All right, thank you. Folks, any more questions or comments you'd like to share at this time? We'd appreciate those now. All right, I've not seen any activity. So again, Tim, thank you. And Leslie, thank you and the Tree Farm Program for bringing us to today's webinar. It's been a great topic and definitely appreciate it. Thank you all.